Let's have a look at another bank reconciliation statement. The sum goes as from the following information. Prepare bank reconciliation statement to find out the bank statement balance as on 31st December 2017. So in this sum, if we see, they have given us the balance as per cash book. So we're going to start the sum with the balance as per cash book, and they have given us 7 other transactions which are going to be placed in the add or less category depending on the balance as per cash book. So first, let's start with the title of the sum. So we've written out the format of the bank reconciliation statement as on 31st December with particulars rupees and rupees. So let's go ahead with the transactions one by one. So the first transaction which we have to record is what kind of balance we are going to use. So the balance which we are going to use in this sum is balance as per cash book. Let's write that down. I've written down balance as per cash book, and the value of 15,000 goes into the outer column. The next transactions, before going into it, we have to split the transactions into add and less. So roughly around 7 transactions we have. So I'm going to give add and leave around 7 lines or half of the page, and next I'm going to include the less categories. Now we can move on into the transactions. So the first transaction, when we see check deposited but not yet credited. So now we are doing balance as per cash book. So you can write it down that when we are doing balance as per cash book, when the cash book is increasing, you'll put it in the less category. When the cash book is decreasing, you'll put it in the add category. So based on this only, we are going to do all the transactions. So the first transaction, again, check deposited but not yet credited. So we have deposited a check into the bank, but the bank passbook shows that it has not yet been credited. So passbook is less. Credit in passbook mean deposits. So they are showing as it has not been deposited, whereas a cashier would have recorded in the cash book bank column as deposited already. So here cash book is more and the passbook is less. Therefore this goes into the less category when the cash book balance is more. So check deposited but not yet credited. See that you write the value in the inner column, rupees 1,000. Moving on to the next transaction, check issued. Issued means payment. Okay, so checks are issued and entered in the cash book. So they have entered as payment on the payment side in the cash book before 31st December, but not presented for payment until that date. So in the passbook, they have not paid it. That is, the person, the third party who has received the check to whom we have issued, has not gone to the bank and received the money from the bank. So our bank account is still there with the 1,500 in it, whereas we have written it on the payment side of the cash book bank column as we have issued, as we have paid. Therefore cash book is going to be less. So whenever cash book is less, we are going to put it in the add column when we do it under balance as per cash book. So this transaction goes into the add column. So now we've got check issued but not presented for payment, rupees 1,500 in the inner column. The next transaction is dividend directly received by the bank. So the bank is receiving it directly, whereas the cash book has no effect of it. They have not recorded the receipt. So if the receipt is not recorded, the cash book is falling short, is less, that is decreasing. So if it is decreasing, we are going to put it in the add category. So after writing it in the add category, put the value in the inner column. The next transaction is direct payment made by the bank for rent. So the bank is paying directly. So the value in the bank account, that is bank balance or the passbook balance, goes down. Whereas the cash book, they have not recorded it as a payment. Therefore cash book balance is more. When the cash book balance is increasing, it goes to the less category. So direct payment by bank for rent is rupees 1,000 again. So put the 1,000 rupees in the inner column. Next, moving on to the next transaction, locker rent charged by the bank, not recorded in the cash book. So a locker rent is a charge which is taken directly from the bank account. So bank is charging it. So when the bank is charging it, the bank balance automatically goes down. whereas it is not recorded in the cash book. Therefore, cash book is increasing. Whenever cash book is increasing, you'll put it in the less category. So locker rent comes to the less category. So locker rent charged by bank, which is rupees 1200, comes to the inner column. The next transaction, wrong debit given by the bank. Debit in a bank is withdrawal. So bank has written something on the withdrawal side which reflects on a decreased value in the bank balance, whereas nothing is recorded in the cash book. So cash book is increasing. When the cash book is increasing, this also falls to the less category. So wrong debit given by bank is 500 rupees in the inner column. Next we have is a payment made through net banking. That means bank is making the payment. So when a bank is doing a payment, bank balance is down. Has been entered twice in the cash book. So the payment is 300 rupees, mean it has been entered as 600 rupees in the cash book. So cash book is double the time going less. So cash book is decreasing. Therefore this comes to the add category. So the value which has been entered twice is 300 rupees. Next is, we've come to the end of all the transactions. So we are going to add all the add categories first. So 1500 plus 200 plus 300 is 2000 rupees. So write it in the outer column. Now the balance as per cash book, which is 15,000, add the 2000, you'll get 17,000 in the outer column. Next is, we are going to move on to the less category with the 17,000 in the outer column. Add up all the inner columns. So 1000 plus 1000, 2000, 2000 plus 1200, 3200, 3200 plus 500 is 3700 in the outer column for the less category. Now the 17,000 less 3700 gives you the balance of the passbook, but whether it's a favorable or an unfavorable balance depends on the subtraction. So from 17,000 we will be able to take 3,700. Therefore you get a favorable balance as per bank statement. So balance as per bank statement to be written here, and the value being 13,300, which is a balance as per bank statement. If my video was helpful, please do subscribe, comment, like and share.